So markets were sold off yesterday again from Friday's big sell-off. They're unable to hold onto their gains, which is a clear sign that there's a bit of nervousness out there. The 10-year US T-note, the 10-year US Treasury note, is running at 4.34% yield. And yes, markets are ignoring it and trying to rally and trying to move higher. Oil is at $94 a barrel. All of that's going to feed into inflation, and expect inflation to tick up over the coming months. But that's going to put pressure on the Fed whether to raise rates any further. The Fed is unable to raise rates because if they raise rates any further significantly, they might do a 25 basis point rise. But if they do it significantly, what's going to happen is they're going to send the US economy down, and that can't happen. Now, with yields at 4.34%, what normally should happen, you should see the Nasdaq is down. Now, the Nasdaq is not down because the Nasdaq is hypersensitive to interest rates. You can expect that if yields rise any further, eventually that's going to chip away at the Nasdaq and the high-tech stocks. You can expect the Nasdaq and those high-techs, including the top 7, which make up 55% of the Nasdaq, to fall away. Meta is overvalued. Nvidia I'm calling down to at least $400 a share. Meta I'm calling down to around about the 270, 265 level near term. That's just 2 high-tech stocks that are overvalued, have gone up over 200% in 2023. In addition to that, you've also got overall sentiment within the market is a little bit nervous. September is an unusual month, and with the FOMC meeting today, Tuesday, and a rate decision coming out on Wednesday, again, unlikely that rates will rise. However, they could surprise markets. Markets are a little bit nervous. Meanwhile, over in China, VC funds, venture capital funds, are suffering. In other words, there is going to be a lack of investment in China because they've failed. There's very few venture capital funds that have managed to return money to their investors. In venture capitals, you have limited partners and you have general partners. The limited partners are generally the institutions that invest in the VC, which are general partners. However, all that money, in my opinion, is lost, as China is not going to regain its status within the next 10 years. It's got major production problems, major industrial production problems, major exports and imports are down, its retail sales are down, and most important, its youth unemployment is huge, and they've stopped reporting it. So China is now become a place of a non-investment. Do not invest in China. In fact, many companies are pulling out of China. Overall, where do we see stock markets going? Equity markets, I see continuing sliding down, and will continue sliding down in the near future. We're not talking about a crash. We're talking about a chipping away at where we're at the moment. We could see probably another 5% or 7% drop by the end of October as far as equity markets are concerned. However, traders on Wall Street are looking to make 2023 a positive year. They need that net asset value to rise that makes them look good. However, any rally, sell into. This is Mayor Valensky with Driving Markets. Share, subscribe, comment. More than happy to help. Have a great day.